Welcome to the 2024 Economic Preparation and Depression channel. I'm your host, Tony. Thank you for joining me on this Tuesday edition, September 17th, 2024. Please be sure to subscribe to this channel for the latest interpretation of financial news. Appreciate everyone's support. I read all of your comments. Thank you very much for the insightful comments on this economy. Today we're going to be talking about we're in the midst of the Federal Reserve meeting today and tomorrow. Tomorrow's the all-important Wednesday date where we're expecting the rate cut anywhere between 25 to 75 basis points and bringing down these interest rates, and that's expected to spur this economy, but we'll see what happens. In the meantime, crude oil prices are looking to get back up, and the economy is on solid ground as retail sales, according to Reuters.com, has been up. So looking at the data here, we can see that the U.S. economy is on solid ground as retail sales surprise on the upside. So retail sales were up according to the report that came out this morning. The Atlanta Fed raised its third quarter GDP growth to an estimate of 3.0%. That's up from 2.5%. The economy grew at 3.0% pace in the second quarter. And so the quote, there does not appear to be any reason for Fed officials to start out with a larger than 50 basis point rate cut, because whatever stress there is in the labor market isn't translating into a weaker economic demand. If there is an economy, quote, that is on the brink of recession, consumers certainly don't see it. Well, you have to keep in mind, too, that American spenders were spending more dollars to get less products. Shrinkflation, as you know, these stores, not only in the grocery stores, but in the hardware stores, shrinkflation is real. It is taking, and also we're paying for theft of inventory, the supplies that we do have, and that's also causing the suppliers and everyone else to raise prices. I'm sure many of you have seen that when you go in these stores now. Everything is behind a glass. You can't check out yourself. Even at the self-checkout, you have to have someone there to check out your products now, even in the self-checkout line. I'm sure many of you have noticed that. This economy isn't as good as it says it is. And the reason why is because we're spending more dollars, because this inflation hasn't gone away, and we're going to be in the midst of a money printing cycle in this fall and in the first quarter of 2025 before the severe recession hits. And that's going to cause prices to continue to swell. And at the same time, unemployment is going to be rising too in this winter, heading into this winter and into beginning of 2025, and this is in all sectors of the economy. So retail sales are rising because obviously we had the back to school people in August, the tax-free sales, students, parents, teachers, university students coming back, spending money in all these different various cities and townships. All of that plays a factor into the boosting of quote unquote retail sales, not to mention online sales are counted in that too. I mean, you got places like Amazon that's dominating. They said that on this article, it says that sales of sporting goods, hobby, musical instruments, and bookstores increased by 0.03%. Building material and gardening equipment stores edged up by 0.1%. Obviously, people are trying to figure out a way to plant hydro gardens, either they're in an apartment or condo, or maybe a full-out garden in their backyards, or if they own property. That's what's happening with that. People are realizing now they need to grow their own food, and that's why these sales are going up here. So naturally, these sales are going out. It says sales at miscellaneous retailers shot up by 1.7%. Health and personal care outlets shot up by a modest 0.07%. But you notice that food services, drinking places were unchanged after rising in July. Otherwise, people are not dining out as much as they were in the past, in the beginning of the summer, unless they're on vacation, obviously for obvious reasons here. So now, crude oil prices. Crude oils continue to see buyers here. Crude oil market, it seems to be doing okay here. Around $71 a barrel is what they're expecting here for Brent crude oil, $72 a barrel. It's pretty much going to stay that way until we get into late November, December time frame. We switch over to the winter blend, of course, and that's what's going to happen there. Now, looking at the major economic reports, according to MarketWatch.com calendar, we had the retail sales number coming in. Like I said, tomorrow's going to be the big interest rate decision. It's always around 2 p.m. or 2:30 p.m. that Fed Chair Powell gets up and addresses the constituents there, and it's pretty much as a guaranteed that we're going to see a rate cut. It's just a matter of is it going to be more than 50 basis points or not. Congress has been asking for 75 basis points. What say ye? Do you think it's going to be a 50 basis point or a 75 basis point rate cut decision at 2 p.m. tomorrow, Wednesday, September 18th? We'll also look at the housing starts. Looks like housing starts are going to be down here. The 1.24 million here is going to be down from 1.31 million. So we're going to look at that as well. And then the initial jobless claims, that's going to be on Thursday, September 19th. That's a very important number here. If the initial jobless claims are ticking up, as you can see here, from 229 to 230, projected numbers that they're expecting, it could be higher than that. This is what senior economists are expecting. and as well as manufacturing, existing home sales, and the leading U.S. economic indicators. So Wednesday and Thursday of this week is just an important week here for the economy, as well as next week and Monday, because we have the U.S. services, manufacturing data, the PMI data that comes out here on 9:45 Monday, September 23rd. So those 3 days are going to be very important for this economy, depending on how we'll see how the markets react as of this rate cut decision. But that's what we're looking at here. Now, stock markets today, stocks were stuck. Wall Street stocks stuck in place, according to U.S. News and World Report, as they count down to the rate cut here. As you can see, many of the markets remain kind of flatlined here as they're waiting for that rate cut to take effect here. And like I said, it all depends on which way they want to go to with the stock market. I believe they're going to have a 50 basis point rate cut here. And they're saying that lower rates would make things easier for the economy. I don't think we're going to be in an easy type economy. We haven't been in an easy economy since 2008, even since the pandemic and since the health crisis. 2019, everything changed. 2020 to begin 2020, and so we just haven't been in a normal economy. And so because of that, I don't think this rate cut is going to have the desired effect that everybody's intending to, because 5% or 5.2% interest rates are really high. And another fact is that it's hurting savers, those people who have big high yield savings accounts and money market accounts, or those interest bearing accounts. You're not going to be getting as much now. It's going to be coming down. And I think that's just absolutely crazy. In a world where spending is out of control on a local, state, federal, and every level possible, spending is just gone out of control. So it's going to punish the savers when they bring these rates down, but it's just short-term punishment, because most of you guys know that we're into preparation and training, not just in monetary, but physically, spiritually, emotionally, and mentally training that's invaluable. It's priceless. So continue to prepare. I'll see you on the next episode. Thank you for listening. God bless.